Thanks very much. Yeah, looking forward to a great conversation, very diverse panel here, both culturally and geographically, so with a wealth of experience from around the world. I wanted to start off just by asking each person just to give a quick introduction so you can understand who they are and what experience they bring. But I'm going to just start off with myself so you understand why I'm chairing this panel. My name's Robbie Walker. I work for a company called Alltech. Alltech was once upon a time when I started with them a startup, but over the many years we have become quite a large international company with 6,000 employees. But we are in the animal health space, and I think I'm probably the only animal guy here. I noticed at last night's dinner and yesterday's lunch, I was a bit excluded. I felt alone. However, we produce natural additives to animal feeds. Microbes, yeasts, bacteria, fungi, algae, those kinds of things that can replace hormones, antibiotics, meat and bone meal, any of the sort of chemicals. So it's a company that has grown on this natural philosophy, and more recently we are doing a lot more around the environmental and welfare space. And the reason I'm on this panel, I think, as a chair, is because as part of my job as growth officer of the business, I manage our accelerator. We have an accelerator where every year we do accelerate or incubate startups, 10 or so a year. And over the last 5+ years, I've seen all sorts of startups come through, some very successful and some less so. But what's most important that I find with all of those startups is how we partner with them, and what they mostly seem to be looking for is a route to market, some way of helping them scale. And so that's what most of my time has been involved with. So look, that's enough about me. I just want to sort of start, maybe just go this way, and just maybe a quick introduction to yourself, and then a little bit about your business so we understand where we're coming from. Just before we start, though, I also want to remind everyone that I am going to be leaving some space at the end for questions. So if you've got any questions, anything at all, please just jot them down. We'll take those towards the end. Thanks.
Thanks, Rob. Great to be here, and great to see such a great crowd before lunch as well, which is always nice. So my name is Danny O'Brien. I'm the Managing Director of EMEA for SVG Ventures Thrive. We are a Silicon Valley-based venture fund focusing on seed to Series A startups, both ag and food. We've done more upstream ag in the past, I would say. I've been with the company 2.5 years to date. I'm based in Dublin, Ireland, so I travel around the European region meeting new startups, etc. I guess the other element of ourselves is, beyond investing in startups, and we've done about 100 investments to date, is working with corporate partners as well to help them on their innovation strategies, working with startups, formulating partnerships to drive value, overcome sustainability challenges, things like that. So we have about 40 corporate partners in our network who we work with very closely. And like you said, Rob, they can be a great route to market for those startups as well. The other element is working directly with farmers to drive early adoption of these technologies as well, which is super important at the early stages. So that's a little bit about us and what I do. And as I said, seed to Series A is what we focus on. I'm happy to meet the startups here. I'm judging some of the pitches later on, so looking forward to that. I'll stop there.
Thanks very much. HH?
Yeah, thanks, Rob. It's great to be here. It just flew in, and the jet lag is going to hit probably this afternoon, but not so bad now. Our areas of focus, we're a Singapore government fund. Our areas of focus are quite similar to Danny's fund. Seed Series A, we go up to Series B as well. But our mandate really is to look into what they call emerging technologies. And the relevance for Singapore is that we've got to look into those emerging technologies that are relevant to us as a country. Obviously, food security is a huge issue. So you can imagine agri-tech is a big part of that strategy. But we also look at sustainability. We look at biotech, and we look at advanced manufacturing. So four completely different verticals. We've got 4 separate teams that look into it. For those of you who have worked with startups, you'll realize that money doesn't always solve all the problems. So within the organization itself, I've got colleagues that look into what they call community building. They provide platforms that allow all the different stakeholders to come together, get educated together, and sort of change things as and when the technology matures. An example of that would be how Singapore became one of the first countries to allow the adoption of cell-cultured meats within the food supply chain. And the rationale for that and the reason for that was that we had the Singapore Food Agency as part of our discussions when we were exploring the technology to understand the safety issues, the production issues, and they were well satisfied when the technology reached a certain level of maturity. Of course, adoption is a completely different story. The cost of cell-cultured meats is high, so even though the regulators might say, yeah, by all means, go ahead and sell it, it's still taking a little bit of time to get traction amongst the consumers. Other than that, I think we have a team that looks into talent development. Every new sector that we look at, in general, there's a scarcity of talent worldwide, and that team's job is to go all over the world to look to see, to engage with universities, to engage with the big corporates, to better understand what is the talent needed, as we sort of build the infrastructure and the ecosystem. And then, of course, ultimately, to try to persuade them that Singapore is a good place for them to re-domicile, either for a short term or for the long term. So that's us. Look forward to speaking to any startups that fit within the mandate. We do the broad agri-tech ecosystem lens, so we do everything from traceability all the way up to cell-cultured meats, bioreactors, factors of manufacturing, so on and so forth.
Tristan, so we've done Ireland, Singapore, now the Alps.
Yes, the Alps, thank you. My name is Tristan Rousselle. I'm actually the grandson of 4 very skilled farmers, but I moved with my parents to a tech city, Grenoble, in France when I was a teenager, where I became a scientist. I actually am an expert in cell culture. That's what I was doing during my PhD. I became an entrepreneur just after that. I created a first company in the biotech domain for pharmaceutical application, which grew quite well and which I sold after 12 years to a pharmaceutical company. After that, from the CEA, which is a high-tech campus in Grenoble, I created a second company, quite different domain, combining nano and biosciences, making a biosensor. And so actually we developed a digital nose. So why am I here? I think digital olfaction has quite a lot of application from the farm to the fork, right? To follow taste, the development of taste at different scales. It's a technology that has, of course, a lot of different applications. One of our shareholders based in New York is IFF, so Flavor and Fragrance Company. We also have shareholders in Korea and Japan, more in the consumer electronic. So it's quite, so it's a second, it's not a unicorn. My 2 companies were mid-sized companies, but I'm quite happy about their development.
Thanks. So I want to jump more into the topic of the day, which is the next unicorn. And we were having a little debate just before we came up here as to what a unicorn is. A unicorn, it seems, Danny, is?
My definition is a company that's valued at over $1 billion.
So valued at over,
as opposed to revenue of $1 billion.
So
people can disagree with me if they like.
so it's some sort of a startup that's made this rapid progress towards this $1 billion valuation. So I guess I mean Danny and HH, I'd like to maybe start off with you guys. Like, are these unicorns? Are there a lot of them out there in our sector? And are we likely to see more? Or is this something that's more confined to the tech space, the Googles and Facebooks of this world? Is it even a true statement in the first place?
Well, I can start for now. I think agtech 10 years ago was a very nascent industry, and over the years we've the amount of funding, if you look at any of the reports, has exploded. I think it was over $30 billion in 2021. Came back a bit last year. So there's a lot of money gone into the ecosystem, and on paper there were a lot of unicorns in both agri-tech and food tech. I think there's definitely still a few on paper who are out there, like FBN, Inari, and a few others on the ag tech side of things. Then you've got the impossible meats on the food tech side of things, and some in the CEA space like Plenty. So there is definitely ones out there. And investing in this space, we believe there's going to be a lot more in the future. I think ultimately unicorn is something that's rare and supposed to be rare. So there is going to be, there's not going to be too many of them over the number of years. But we believe there's going to be a lot more in the future in a variety of sectors that we can talk about on this panel. So that's kind of my opening statement there on that. I don't know if you have any other perspective, HH.
Yeah, I think I'm in general agreement. I think, well, to me, a unicorn, and we have a few in our portfolio, is 20% the company and 80% hype. So if you sort of ride the hype cycle, you could build a unicorn tomorrow if you wanted to. You just have to know which are the right hype cycles. And agri-tech is such a broad-based, ecosystem, so to speak, that there's a lot of convergences and overlaps with other industries. For instance, in bioreactors, companies that are doing agtech bioreactors could technically be positioned as biotech bioreactors, which have a much higher valuation. For instance, we have a company in the traceability space. They started off using blockchain to do traceability, nothing fantastic. They do fresh fruits, the kind of business that's going to grow really slowly. But what happened is that they then went into financing and they went into insurance, and suddenly they became a fintech company and their valuation just shot through the roof. So I think these convergences and these overlaps, and I've met a company downstairs that looks into space technology. The valuations in these different sectors can sometimes be translated into the agtech sector as well. So I think if you want to ride the hype wave, it's more a matter of deciding whether you want to sell your soul and do this kind of thing, or whether you want to stay true to your course and be true to the outcomes that you want to achieve.
So we all need to be artificial intelligence companies, is what you're saying?
Oh, well, large language model companies. I think AI on its own probably was not going to get you $1 billion, but you start to talk generative AI, LLMs, and suddenly all the investors will be just throwing money at you without really knowing why. But that's the nature of the industry. I mean, I'm from the VC industry. I know my fellow VCs. A lot of them say, hey, I'm an investor and we only do fintech. So it's very hard for them for startups in the agtech sector to get their attention unless there's a very strong fintech angle to it. But once they do that, then suddenly you become the rare company within that they are looking at, which is which is quite different from the others, and you get a lot more attention. So I think for those founders who are here today, it could be useful to consider this, to decide how you want to position your companies when you're raising funds. If the ultimate objective is to raise as much as you want.
Good advice. So just following on from that question, to just reflecting on my own experience within our accelerator that we've been running, I've noticed that over the 5+ years we have this mixture of companies that success rates. We've got these companies that are either they either do pretty well, some that sort of fold or get sold off, and then you got this sort of middle ground. We got these sort of zombie companies that they don't really do much. They just sort of stay there. Normally, we can fix those through partnerships and the like, but I often wonder whether it's just me because I select badly and do a bad job of mentoring, or maybe maybe it's just there are some stats. But what's the success rate of startups in general? I mean, if you've got what percentage do you think are going to go through and do pretty well and are worthy of investment, and what percentage are you expecting to just sort of maybe lose on? Do you have any feeling for that?
I got to be careful because I just saw one of our portfolio companies walk in at the back of the room. So no, in general, I think there's a power law that exists in venture capital, and that will tell you that there'll be 1 or 2 companies in the portfolio that will return the whole fund. And that is true in venture capital, and the research shows that. I think in ag tech, it's a little bit more nuanced, where the outcomes may not be $1 billion. They may be hundreds of millions or tens of millions in some cases. So I think the delta is a little bit wider of the successful companies. It might be a greater proportion who are successful, but the successful outcomes aren't as outrageous, if you like, as other sectors of fintech or whatever it might be. That's my experience looking at our portfolio. There's kind of 10 to 15% who have gone on to be 5 to 15x companies, and again on paper, we've got some exits coming up, and then maybe there's 50% who maybe raise more money, who kind of keep going, they build successful companies, but they don't achieve outsized success. And then, of course, there's obviously the failures in there as well. And we're seeing a lot more of those at the moment. We've had a few, we've got 100 companies, but we've had a few over the last year that have run out of money. So it generally tracks what you see in venture capital, but just that point on exits, I think, is a bit nuanced.
So you're saying about 15% you're expecting to do really well?
Hoping.
Tristan?
Yeah, actually, I confirm. And as an entrepreneur, it's quite odd because, especially serial entrepreneur, my first company was considered a success. It was not a huge investment, right? But still, 50x, something like that. Everybody was happy. And then, so decided to start another one. So how can you do twice 10% success rate, right? So it's a bit of a question you have to ask yourself before embarking. Quite a few people, including investors. So, can you really succeed twice or 3 times? So that's the real question from the entrepreneur side. And I also had to warn my family, so that at some point it's rare. It's rare, and I also mentor a lot of entrepreneurs. So for me, one of the motivation is you have to put yourself in a situation where failure is not an option. So this is not what I say to the employee, right, but to the management team at least. And this mindset can help, because it's too easy to say, yeah, no problem, it's only 10% success rate, so we'll find a solution. We always find a solution in case of failure. But I don't think it's the commitment. The commitment is success. And so the only way is that failure should not be an option. So it's a bit odd, because we have a strange place in the value chain innovative startups, taking technologies from academia and bringing them to the industry with this very, very high risk, but still doing better than the others, right? Otherwise, we would not exist. So it's quite an interesting question, actually. 10% and answer, 10% success rate is quite low.
So what you're saying is you've got, sometimes it's the serial entrepreneurs that sometimes maybe do better because they understand how to do it, which is kind of interesting.
I don't know, it doesn't increase the success rate.
Yeah. Hsien, what is your experience?
Yeah, I think I sort of align with the 10% success rate, because we benchmark success as about a 40x return, given the stage at which we invest. But of course, it's tiered. So you're going to have maybe 10% that going to return your fund, another 10% that's just going to do that 4 to 5x return, which is acceptable. Then you've got the zombies, which Rob was talking about, which are actually the biggest pain. If you're going to fail fast, and let's just not have to administer this company anymore, and then release the talent back into the ecosystem, I think that's probably the best way to do it. But in deep tech or in emerging tech in general, what happens is that people tend to raise more money, so they've got slightly longer runways, so they don't actually fail that quickly. And a lot of them are somehow always able to raise that little bit more to continue when you tell the founders, I think we need to close it down. And they're like, no, we have been able to find $500,000 from here, and they just keep on plugging away. You've got to admire them for their perseverance, but sometimes they're just up against a wall. And those that actually make it after that tend to be the exception rather than the rule. So I'm just stating from a statistical perspective that, probably if time comes to just wind it up and move on to the next big project. But yeah, I think in general, the failure rates are, as Daniel was mentioning, about 10%.
So
success rate.
Success rate, yeah. Okay, so 10 to 15% success rate, no zombies. You want to fail fast. Got it. And what I got there is about a 40 to 50x is your expectation of what is success, which is pretty high.
It varies across industries. So if I'm in the biotech space, then yeah, probably 40, 50x. In the agri-tech space, so I mean, it follows the PE ratios within the broader public markets. Yeah. So we understand that certain sectors will have slightly lower PE ratios. Other sectors, especially in digital, you expect much higher returns.
I think, Tristan, you were mentioning some of your sort of successes and failures, but I think it would be good just to talk a little bit about what are some of the challenges that these startups are facing. For you, what are the top challenges that we sort of need to be overcoming, and any thoughts on that?
Yeah. Well, I mean, I think you introduced with this success rate, right? So it's life of startups. So we are living this on a day-to-day basis. So this is an important challenge because living in this with this type of pressure leads us to try to find solution. We have to find solution to this problem, which is very high failure rate, right? So that's the main challenge. It's mainly human in terms of management. How do you motivate the teams so that they understand that the risk is important, but still are happy to try to face the challenges. So of course it's always the team first. The second is how to communicate clearly with the investors, which I may not be right now, but so because indeed you always also have to motivate the investors so that they continue to follow and understand you well, and it's not easy because we are on the day-to-day basis having to solve technical challenges, but still communicate on very clear numbers, how much we spend, how much we earn, etc., etc. When will we be profitable? How can we evaluate the valuation of the company? So this. So those two main parts, especially for the CEO, who is at the interface of the two, have to be managed every day. So communication with the shareholders and, of course, communication with the team.
So it's the communication, and you also sort of mentioned a little bit of culture there. Yes. From you guys, is there any other sort of major challenges that you're seeing that sort of are blocking us getting to that next unicorn that you want to highlight?
Well, I'll take a stab at that because as I said, we invest very early, and when I say early, we sometimes go all the way to the universities, identify IP that we like, and try to build a team around it. A lot of the failures that we have seen, at least from our portfolio, is not because the science doesn't work. In general, the science actually works very well. It's the founding team that sort of breaks it up, and the founding team can break up for a variety of reasons. The two founders can't get along. And then they break up because there's a diverging view as to how the company should be run or where the tech or where the product should go. But another failure point is when founders don't realize that they are not the best person to take the company to the next stage. So it's usually easy to do seed, Series A, and probably Series B with the founder. But as you start to get bigger and a more structured environment is needed, founders that don't have the experience necessarily to run bigger companies, to understand the challenges of bigger companies, can cause a company to stagnate or even to fail at that point in time.
Good insights. I want to move from those challenges maybe onto some of the opportunities so we can get more into the topic here, where we're going to see the next unicorns. Tristan, you've got some, you started speaking at the beginning there about cell culture, but then you said you were doing, a digital nose? Yes. And what are you seeing? I mean, if you were going to be starting all over again, where would you be putting your money? What do you see as big opportunities that are out there at the moment?
Well, it depends which part of my money. So the way I manage my personal portfolio, which is not huge, but still, so I would definitely invest in deep tech, small amounts. So that's what I do. It's not sufficient, of course, for deep tech. It's very risky. I think the risk also comes from the level of innovation. So, and there is some deep tech to bring in to improve or to for those the challenge about the future of farming. So and I still AI. I don't know, but robotics for sure. Robotics, personally, I think that robots are finally coming. So, I mean, they are in the industry, but not so much, and they are in the field. But are they really present enough in vertical farming, for instance? I'm not sure. There is a lot of tasks that new generation of robots will be able to do, and which are not right now. So, robotics, and yes, and then for, let's say, my long-term safe money, I think this industry is going to go through a big transformation, which will require, long-term investment. I would say obligation type, not just stock option, but really something where there will be some growth in valuation, but maybe more slow. So because it will be very much capital intensive, right? So this part has to be less risky. So part of my money I would invest in a big infrastructure, for instance, again, maybe for vertical farming. So it's, big because, but still buildings, right? So
okay.
You see what I mean?
Just on the area of opportunity, Danny, you mentioned just before we came in that you have, I think Thrive have done a survey of opportunities, and maybe you can tell us a little bit about that. What are some of the findings in that?
Well, we do this report every year called the Top 50, which tracks the scale-ups in the sector, and what's hot and what's not right at the moment, and where the money is going. And it's not just how much money these companies have raised; it's the velocity that they're growing at. And we pick out the top 50 in food tech and ag tech. And I think some of the areas that came out this year of what's hot is novel crop inputs. So anything on the bio space, bio alternatives, on the crop protection and crop nutrition side is really important right now and driving a lot of value. The controlled environment ag space is still quite strong, even though there's some companies struggling right now. I think folks like Plenty are emerging as strong companies. I think you'll see some consolidation there. I think AI in general is obviously, there's a lot of hype around it. I missed the last panel. I would have liked to see more of it, but I think there's many opportunities for AI across agriculture, and the convergence of AI with other technologies like genomics or genetics, for example, for new, plant breeding and discovery of new compounds, I think is really exciting. On the digital side, on digital agronomy, I think that's exciting as well. But the space is moving so quickly, it's hard to know where to place your bets and things like that. So there's some of the areas. I think, in general, our research showed that the plant-based space is struggling right now as well. It's raised so much money in the past few years that those follow-on rounds aren't there right now. There's the big guys have stepped out of the market or are moving a lot slower, so that's struggling right now. And then I think the other opportunity is a lot of ag tech solutions can be quite niche, and we're seeing consolidation of solutions to present a more rounded opportunity for farmers to engage with that platform. So I think that's a prediction that we'll see more consolidation across early stage ag tech, companies who can't raise follow-on funding, but have a decent product that's providing value and will partner with other companies in that space. Or there's a few folks who are kind of buying up smaller solutions to create more digital platforms like Semios, for example. So there are some of the areas that I think are shining right now.
HH, anything you want to add to that list? It sounds pretty comprehensive to me.
Yeah, I think it probably summarizes all the things that we have also considered. The only thing I would add to it is because of our own unique way in which we invest. We sort of believe that cell-cultured or cultivated proteins is going to be the future. Maybe not tomorrow, maybe not in the next few years, but certainly the future. So we sort of prepare for it by investing in things which would facilitate this particular industry's success. For instance, we understand that bioreactors are fundamental to the production of cell-cultured proteins. And at the moment now, the yields and the capacity is just not sufficient because the biotech sector is taking a big chunk of that capacity as well. So if you ask me where I would invest my money, I'll probably be investing in those factors of production, fermentation, bioreactors, companies that are putting in the hard work to build the infrastructure, and who may actually take a big chunk of the profits when this industry does finally take off.
Okay, so let's just give a quick round of questions there then. If there's, or did you have another one that you thought was hot? So what's hot and what's not? Hot or not? You said lab-grown meats. Anyone think lab-grown meats is not hot?
Okay, I'm going to be the bad guy, but no. So as a cell culture expert, I think I know the challenge, but you're raising the point, fermentation, right? So fermentation is very close to cell culture, and fermentation is traditional in the food industry. So looking at what has been done there and what is still being done in fermentation and try to adapt it to other types of cells, bacteria are cells. so are mammalian cells, but there should be a continuum so that we don't expect too much too fast from mammalian cells, when in the meantime, fermentation can bring a lot. So be careful on how you address it, because yes, there are other ways to address, to manufacture proteins that are maybe easier now than cell culture.
And I'll give an opinion there. I think cell-cultured meat is not hot. I think cell-cultured fats and the flavoring part of it is, but what we've looked at is that you're creating the entire steak. I think there's a long way to go to making that a viable proposition. So focusing on the flavor, we think is a good thing. Artificial intelligence. Anyone think that that's not hot? I think.
Okay, I'm going to stick my neck out here, and we have to play devil's advocate, right? And I speak from the position of being a founder 20 years ago and selling my company in the AI space. So I know how it has sort of developed along the way. I think that there's a lot of hype behind AI. There's also a lot of limitations to AI, which a lot of people are not talking about. But the mathematicians that build the algorithms have a clear understanding as to what those limitations are. So believing that AI is going to solve all the world's problems is something that perhaps the less aware VCs would be throwing money at. And I've got no problem if they throw money at our companies and push up valuations, but we would be very hesitant to go in at we'd be very careful about valuations at this point in time in that sector.
Yeah, actually AI is already there, right? So my subject is how to grow wheat in vertical farm, right? So not just wheat and rice and potatoes, right? A large, how to bring what is today in the field ready in vertical farming. Okay, so that's what I'm working on personally. And so I asked ChatGPT, and he has got so first he told me it's possible, and then he told me exactly the recipe. So I think part of the AI is already there. Of course, when we're talking about robotics, there is a need for AI. The robots that are ready now, they are not trained, so they have to be trained. And yes, of course, there will be some AI very specific to this industry, but very specific.
Okay. So generally, AI, be careful. Insect protein, hot or not? Anyone think it's not hot?
I think not hot for human consumption, but on the feed side, fish stocks, things like that, I think that there's a huge opportunity there, especially valorization of food waste through insects is an opportunity.
You know, there's a company downstairs with human food. Anyone else?
It's a sector that we have studied extensively because it offers a clear alternative to other types of protein, but I've got to agree. I think from a human consumption adoption perspective, it is more likely to be animal feed that it goes into. It is still a very incremental kind of business, a more traditional steady state kind of business than a VC investable kind of business. The part that a lot of people forget is always the consumer. So if you won't eat it because of whatever reason, you can have all the rationalization behind it and it's more sustainable and all that, but it's just, you might eat it once or twice, it's not going to form a habit.
Yeah, and just a disclosure, we actually do include our insect into our high-value aquaculture diets. It pencils in well, very good functional protein for aquaculture, but it's really difficult to get it into some of the other diets, animal diets.
Actually, there's an interesting anecdote on this, because we raised this point as well to some of the professors, and they said, hey, every day we consume more than a million parts of insects in just the regular food that we eat, just from the stuff that's lying on the table. So you're consuming insects, but to consciously do it is a completely different story.
Okay, I'm gonna do 3 more, and then I think we're gonna go to some questions from the audience, maybe even on robotics. Vertical farming. Anyone think that that's not going to be a hot area over the next few years?
We're pretty bullish on it.
Okay, vertical farming's in.
Yeah, I think it is, and that's why, of course, right now it's focused on some types of food, right? Essentially green leaf or herbs. And personally, the subject I'm working on is how to bring this, as you understood, to large culture. So is it possible again to grow rice, to grow wheat, to grow potatoes in vertical farming? I think it is. It will require huge investment. So, but not more than gigafactories. So for me, the way to go to vertical farming is giga vertical farming factories, and with to implement, of course, the government the same way they have been helping gigafactories for batteries. They should help for culture, and of course to involve all the stakeholders, including the farmers. So the farmers will. It's easy for an entrepreneur, right? So I'm saying stupid things, but and I've done it as well. So you sell lands and you invest in vertical farming. The lands will be transformed into forest. So what, you know? So I think there is a path for a quite strange, big transformation based on vertical farming.
Okay. Another one that we've heard a lot about at this conference is carbon trading. Really hard to understand. We're trying to do it at the moment. It's almost impossible to practically do it. Is it going to come? Is carbon trading going to be a thing?
I think it will be. In our corporate network at the moment, all those major companies are looking for a way to deploy capital into proven, verified credits. The issue is there's not enough of them. There is some, I don't want to say fraud, but misinformation maybe out there around some of those. There was even news this week about Vera, which is concerning. So I think there's a real opportunity there, and I think therefore the technology will catch up to meet that opportunity. That's not going away anytime soon, and I think ag-based carbon storage is a huge opportunity, again, for major corporates outside of agriculture who want to offset their emissions as well. So we're bullish on that for the future, but it's a difficult place to invest right now because it's hard to verify what's real and what isn't, you know?
Okay, and then last one from me before we maybe go to some questions, guys. India. India was in the BBC this morning, and it seems to be on the news all the time. Is India the new hot area to invest in, and are we going to see a lot coming out of India?
Yeah, I'm going to jump in here. I mean, we've been investing in India for quite a while. It's a complex market. The opportunity definitely is there. There are currency controls as well. I mean, it's perhaps not as well documented as in China, but certainly it's not that easy to move your money in and out of the country. So if you're going to set up a fund in India itself to invest in India, you could probably do pretty well. There's lots of opportunities there, not just in the ag tech space, but in a lot of other areas as well. But I think from a structural perspective, if you're a fund investing in, you would have to take into consideration some of these concerns.
I just mentioned we've one portfolio company doing quite well there, and we've invested alongside Omnivore, who are very well known in the ecosystem. And I think having, in more unfamiliar markets, at least for us, having strong local partners and co-investors is a big help. But the macro trends all point to India being very strong.
I'm going to move just to the audience. Are there any questions from the audience for our panel? Two.
Thank you very much for a very interesting panel. My name is Valeria Kogan. I'm CEO and founder of Formato. I'll be pitching on the session. So my question is that we're right now at the stage where we have customers, just started sales, but looks pretty good, corporate partners, and everybody approaching us, like farmers from different parts of the world, different crops, different projects with corporations. And what would be your advice for the company on the scale stage, like how to scale up, but still keep the narrow focus, not to be torn apart by a lot of opportunities that are out there. Thank you very much.
I can start, but it might need some input from the panelists here. I think the number one thing is focus. We see a lot of companies that get to the point that you're at and they get pulled in different directions, different geographies, and focusing on what you're doing really well and doubling down on that and building up even if it's a niche, building up your name and reputation and potentially IP there is crucial, and then expanding as you get a bit bigger. We've seen a few companies go in a few different directions and then they end up nowhere. So that's the one thing I'd mention. Obviously, in terms of fundraising, it sounds like you're in a healthy position right now. I think markets are generally difficult right now to get scale capital. A lot of investors are sitting on their hands looking after their own portfolios. So if you can, drive revenue and look towards profitability, that's always the cheapest capital to come across as well. And not every company needs to raise venture capital in this space to be successful as well. So that's one thing I'd mentioned, but I don't know the specifics of your company. But best of luck.
I'll just add one thing to that. I think it's important to partner well. So not necessarily the biggest corporate partner, but a partner that you can scale with. And then within that partner, not be forced into going global on all projects all at the same time. So 1 or 2 pilot projects with a partner of scale that you can work with gets you very far, very quickly.
Yeah, maybe I can complement because I have quite a lot of experience at this level as well. Still generate competition between your customers, so that you remain free. So it's not easy because indeed they will all want some type of exclusivity, and at the same time you will remain and you will gain experience by, let's say, to simplify, doing twice the same thing, and of course benefit from it. So as an entrepreneur, being manager of a company, being able to organize some type of competition between your customers is helping a lot the startups, even if it's quite tricky.
And we have one last question over there before we have lunch.
It's 2, but very quick ones. Zibi Levitsky from Lipton Teas and Infusions, which is a spin-off from Unilever, so we are a corporate startup, I would say. 2 questions about the venture capital and the next 3 to 5 years in context and food and agri-tech. What would you consider are the current gaps, capability, skill-wise, and the approach-wise in terms of what will be required? And the second part of the question is, in context of food and agri-tech, do you think value of natural capital would be considered or reflected in valuations of the companies?
I'll tackle the first part of that question. If you ask me what the gaps in the market are, is talent. I think the training currently provided by the universities is not churning out enough people with knowledge of agri-tech, at least not in my part of the world, or in all the different factors. So I think talent is going to be a critical issue that needs to be addressed. But the problem is that talent there's a global shortage. And I was in India recently, and they told me that they have a shortage of AI engineers. And I was saying, if India has a shortage of AI engineers, what hope in the rest of the world? So I think talent is going to be critical. Now about the natural capital, I think that's going to be difficult to assess. I think it's going to be dependent on what the global landscape is going to be like. For instance, if you are going to have droughts and shortages and areas where food is going to get scarce, then you're going to start to see food tech companies' valuations just go up, simply because it's addressing a global fundamental need. It's just like how COVID pushed up the valuations of all biotech companies.
Great. I think we're out of time there. I know that there were 1 or 2 other questions, but I think the speakers are around, so it'd be good to just catch up afterwards if you'd like. Thanks very much. Thanks to the panel. Really enjoyed that.